Hey everyone, today is a huge day for Supermicro Computer, ticker SMCI. The stock is making big moves, and we've been talking about this for months. Last night's news? It still leaves just enough doubt to keep skeptics hesitant, meaning there's still time to grab shares before this thing really takes off. My price target? $83, a potential 115% gain from here. Think back to Palantir last year or Nvidia before that. SMCI could be the stock you'll wish you had bought sooner in 2025. Since our mid-November update, it's up 108%. Just last week, it jumped 49% after SMCI's latest business update. The market likes what it sees. Another 7% pop after hours, breaking $40 per share. Even with yesterday's 9% dip, SMCI is my largest position, over 19,000 shares, and I'm up over $211,000 since last year. I started buying in September and kept adding through November's crash, securing a 39% gain. If it hits 83, that's another $865,000 in upside. This could be my $1 million stock. So, what was in that update? Why do I still see massive growth ahead? Let's break it down. Great opportunities don't last forever. Like they say, the best time to plant a tree was 20 years ago. The second best? Right now. If you missed out before, you still have a shot. Plus, I'll share a couple of option strategies to maximize gains while lowering risk. Let's start with last night's news. Why it was great, but also why it leaves just enough uncertainty to keep the door open. This was SMCI's Q2 2025 earnings report. Unlike most companies reporting Q4 2024, SMCI follows a different fiscal calendar. Their fiscal year starts in July, so October-December is Q2. Now, you might notice they say management expects to report. That's because they're still finalizing numbers and auditing, so they're cautious. But these numbers are real. Sales came in between $5.6 billion and $5.7 billion. Analysts expected around $5.77 billion, so a slight miss. Normally, that would tank a stock. But here's the thing. Revenue is still up 54% year-over-year. That's huge. Gross margins landed between 11.8% and 11.9%. Margins had been shrinking, so this rebound is a great sign. Earnings per share came in slightly below expectations, 58 cents to 60 cents versus 61 cents expected. But this is a tiny 2% miss. Nothing compared to last year's 23% miss in Q2. Investors are not worried. SMCI reported $1.4 billion in cash and $1.9 billion in debt, slightly burning cash but also reducing debt from $2.2 billion. Some analysts worry about cash flow, but with a new $700 million convertible note, liquidity isn't a problem. Looking ahead, Q3 sales guidance is between $5 billion and $6 billion, slightly below the expected $6.1 billion. This suggests some customers temporarily switch to Dell or HP due to uncertainty. But the bigger picture? Still incredibly strong. For full year 2025, revenue guidance is $23.5 billion to $25 billion, about $4 billion below estimates, but still 62% growth year over year. CEO Charles Liang made two major statements. First, over 30% of new data centers are expected to adopt SMCI's liquid cooling tech in the next year. That's massive. Meta, Amazon, and other giants reaffirmed AI spending, and JP Morgan estimates the top 5 tech companies could spend $1 trillion on AI and data centers by 2027. SMCI is leading here. Second, SMCI is on track for $40 billion in revenue by 2026, a 65% jump from now. If that happens, this stock is going to explode. Now the big question, Will SMCI meet the NASDAQ deadline to file financials by February 25th and avoid delisting? Management says yes. They also confirm no need to revise past statements, meaning short seller allegations were mostly baseless. That helped push the stock higher after hours. For those looking for even bigger returns, here are two option strategies. First, the February 28th call options. If SMCI files on time and the stock jumps, these options could see big gains. For example, the $50 call at $2.42. If SMCI hits $60, that's a 33% return. Second, a covered call. Buying the stock at $38.60 and selling the January 2026 $55 call for $9.35 lowers your cost to $29.20 per share. If the stock hits $55, that's an 88% return while reducing risk. Even without options, my $83 target gives SMCI a 115% upside. Based on revenue, SMCI's market cap is $22.6 billion. With expected revenue of $24.3 billion, its price-to-sales ratio is just 0.93x. That's cheap. Similar growth stocks trade at 2 times sales or more. If SMCI returns to 2x sales, that's a $48.6 billion market cap, 115% upside. At 3x sales, a $120 billion market cap and a $200 stock. Bottom line, SMCI is still a buy. If you want to learn more about options, check out the linked video. And don't forget to subscribe and hit the bell icon so you don't miss updates. Let's talk money.